You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, shake that. Raise your hands up, raise them out.
Hello, everyone, and happy Wednesday as well. I hope everyone is having a great week so far, and welcome to the Daily Currency Call presented by Forex Trading Asia, and welcome to all the LCMS Trader Club members as well. We've got a nice little turnout today too. And if you are watching this on the delayed telecast on YouTube, make sure you visit the Jindal Thai website as well to access the LCMS Traders Club as well. We are welcoming in new members too. So just to get started, we'll just go through the introduction. If you are new to the call, this is the Daily Currency Call presented by Forex Trading Asia. Again, thank you for joining us as well. A little bit going on as well this week, so definitely worth tuning in and catching up on everything that is going on. It is episode 441 and it is the 15th of December. So the Currency Call is presented every Monday to Friday at 11 a.m. GMT +8, and the currencies we analyze are as follows. Monday, Aussie and Kiwi. Tuesday, the Euro. Today, Wednesday, is the Pound. Thursday, Yen and Gold. And then Friday, CAD and cryptocurrency. And in the Currency Call, we go through the market economic updates, the key support and resistance levels, trade ideas, and much more. For today, it's going to be Bank of England and ECB with Kim Hong, just discussing what is going on with that today and also tomorrow. And the Currency Call is going to be very beneficial to both the long-term investors and also the short-term traders. And here we will go through what could move prices, possible trade ideas, and we'll highlight the potential targets and also risks. A disclaimer as well, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades. So just to get things kicked off, we do have Kim Hong here, currency strategist at LCMS Traders, just discussing the Bank of England and also the ECB. There's quite a bit going on tomorrow. So just to get everyone prepared for that, we have Gim discussing that now. So over to you now, Gimmy.
All right. Happy midweek, everyone. So the Bank of England, all right, will be meeting tomorrow, okay, and they will announce the monetary policy decision at 2000 GMT +8. All right. So previously, okay, they held monetary policy unchanged, okay? Interest rate remains at 0.1%. QE remains at whatever amount they are targeting at, all right? Was pretty disappointing, okay? During the previous meeting, we were actually expecting them to hike interest rates, but they didn't, right? Hence, we see, weakening in the British pound, all right? So this time around, okay, it's going to be another disappointment. Initially, I wanted to say, we can actually expect an interest rate hike this time around. But, okay, with this whole Omicron variant going on, and of course, by now, you guys probably already heard from the news, Omicron cases in UK has been climbing, has been rising, has been spiking upwards. So, it's actually a big problem now for the UK and a big headache over there for the Prime Minister Boris Johnson. Okay, so because of that, they have come up with new restrictions. People are encouraged to work from home. The whole Boris Johnson's Plan B and things like that. Oh, but nonetheless, they are still allowed to go to the pubs. Okay, except with their mask on. All right. So with all this whole COVID issue going on, Omicron specifically, all right, it is unlikely that the Bank of England will be increasing interest rates. All right. Another insight is that I think shortly after the meeting back in November, okay, shortly after the November's meeting, one of the committee member, okay, Michael Saunders, who actually voted for a rate hike back in November, okay, he was actually saying something like, he wants more details on the Omicron variant before deciding if he wants to vote for a rate hike this time around. Okay, and for those who don't know, Michael Saunders, he's actually a hawk in the Bank of England. A hawk meaning, someone who is hawkish, a policy decision maker in the central bank who is hawkish, okay, who tends to favor more towards monetary policy tightening, okay. They are more towards the let's end QE fast and get rates higher as high as we can kind of person, okay, kind of a member, right? So he's actually a hawk. And for a hawk to actually be so cautious, okay, this time around, yeah, I think the chance is very, very slim that we will be seeing a rate hike from the Bank of England, all right? But nonetheless, okay, we still have things to pay attention to, okay? Now, the most direct move will be this, okay? If they were to choose not to hike interest rates and provide no more details, okay, because at this time around, there's no press conference and things like that, all right? So if it's just going to be like no rate hike, we'll see how it goes before we decide for the next meeting, which will take place in February, then chances are we may actually be seeing a weakening in the British pound, okay? However, if, where is it? If we actually see a change in the, what do you call it? Votes, all right? So where is it? Over here, Bank of England. Okay, so let me just zoom in. Over here at 2000 GMT plus 8, the decision will be announced. So the votes, okay, the first one is the MPC Assets Purchase Facility votes, which is basically the QE. Okay, so there will actually be 3 numbers. All right. Previously there was 0 number of people, members, actually voted for an increase in QE, okay? And then there are 3 members who voted for a decrease in QE, and the remaining 6 members actually voted for no change, okay? This time around, the forecast, is for the numbers to be the same as well, for the votes to be the same as the previous month, okay? So if we were to see more people in favor, okay, specifically voting for a QE cut, okay, a reduction in QE, well, aka a QE tapering, okay, then that is likely going to be bullish for the British pound, okay. If it remains unchanged, then we'll see how it goes for the bank rates, okay, the interest rates. Then price will move according to the decision being made, okay, on the interest rate. All right. And then the second vote over here is the bank rate votes. So the first figure 2 indicates that previously 2 members, one of them being Saunders, okay, who voted for a rate hike, okay, a rate increase. And then the second figure, which is 0, voted for a rate decline. Decrease, right? And then the remaining 7 members actually voted for no change in the interest rates. If we were to see more people, okay, who's going to vote for an increase in the hike, okay, so from the 2, if you're going to see a 3 or 4, that would indicate a hawkish tone coming from the Bank of England, okay. Hence, we can actually expect the British pound to rise, okay? So it's not as straightforward as, oh, if the Bank of England is going to keep rates unchanged, then we can expect a weakening in the pound, hence I'm going to sell pound, all right? We still have to look at the votes, okay? Because if the votes were to remain unchanged, fine, then, they're just going to hold rate unchanged at 0.1, hence we can actually expect British pound to weaken. But if there's any changes to these 2 votes over here, okay, then we will have to see how the vote shifts, okay, because if more people actually vote for QE tapering and more people actually vote for rate hikes, then it will be good for the British pound. Good meaning it's likely going to strengthen, okay. Now, on the other hand, if more people are going to, they can't vote for a cut in QE, not at this period of time, okay. I'm sorry, increase in QE. They can't vote for increase in QE at this point of time, all right. And they can't vote for a cut in interest rate for obvious reasons, okay. So it's either more people are going to vote for a QE tapering and a rate hike, okay, or they're going to remain unchanged. Or less people are going to vote for a rate hike, okay, because of the whole Omicron issue. We are going to adopt a wait and see approach. before we decide, just like Michael Saunders, right? He wants more details on the Omicron variants before deciding if he should vote for a rate hike, okay? And yeah, that's how we should be trading the British pound later on, or not later on, sorry, tomorrow at 2000 GMT plus 8. Not so straightforward, all right? Not so straightforward. So I'll be around in the EcoFin platform to, just break down as soon as the news has been well, break down the news, not like personally break down, okay, as soon as the news is being released, okay? So votes is something that we have to pay attention to. The second thing that we pay attention to is the rate statement, okay? It's probably going to be quite straightforward, okay? Whether or not they hike interest rates. If no, what we want to pay attention to is what's the concern? Specifically, what's that called again? Forward guidance, okay? If the central bank is going to mention something like, oh, with this whole ongoing Omicron, it seems very uncertain, on this whole UK economy and things like that. We're not sure if lockdown is going to be returned and things like that. Then, yeah, we may have to push back our, rate hike discussions to, I don't know, 2 meetings down the road or something like that, then it's going to be bad for the British pound. So we may actually expect pound to weaken, okay? However, if they are going to sound positive, saying that, yes, no doubt, Omicron has brought a new wave of uncertainty to the UK economy, to its recovery and things like that, but we believe, okay, that we are likely going to see our resilient economy, overcome this whole Omicron variant easily, okay? And hence, we can still look forward to a rate hike. Then it's likely going to be positive for the British pound, okay? Just like how the RBA was, the recent RBA meeting, right? They actually mentioned that this whole Omicron variant is actually a renewed uncertainty to the economy, to the economic recovery. However, well, our economy is going to be very resilient, okay? And it's not going to deter us from, it's not going to deter the economy from its recovery, right? So if the UK, if the Bank of England is going to sound something like what the RBA has sounded during the most recent meeting, then we can actually expect the British pound to strengthen, okay? So overall, really, it's not going to be a straightforward trading for the Bank of England this time around, okay? So please keep your trade short term, all right? This is going to be really like, you can actually see spikes all over the place, spike up, spike down and things like that. There's not going to be clear directions, all right? So if you're not confident with trading news and things like that, just stay out for the BOE, okay? Because, we have the FOMC, which can be pretty straightforward, okay? So that's all I have to share for the Bank of England. Any questions? Nightclub in Newcastle has apparently been given the honor of the biggest spreader of the... Yes, exactly. You see, so you see the whole renewed uncertainty and things like that. Nightclubs. I don't know why Boris Johnson is still allowing people to go nightclubs, but it's the way of life, I guess. All right. So no questions for the BOE. Let me just move on to the next central bank meeting, which is the ECB. All right. Okay. ECB is going to be meeting tomorrow, and they'll be announcing the decision at 20:45 GMT plus 8. Just 45 minutes after the Bank of England announcement. Okay, so I don't know why this time around, it's probably my first time seeing the Bank of England and the ECB having both announcements like stacked close to each other. All right. So anyway, previously the ECB actually held monetary policy unchanged. Okay, as widely expected. This time around, they are going to keep monetary policy unchanged as well. However, there's one thing that we have to pay attention to, okay? And it is, what's life going to be like after the PEPP, okay? When it ends in March 2022, okay? So the Pandemic Emergency Purchase Program, okay, which has been set up by the central bank, okay, in response to the whole COVID pandemic, is coming to an end, okay, in March 2022. So, the market wants to know what's life after that, right? Will the PEPP be sort of like, shifted over to carried over to the APP, the current assets purchase program, okay, which has been ongoing for I don't know how many years, okay, or will it just going to be, will the PEPP going to just be ended just like that, right? Just put a halt to it and no more bonds purchase will be carried out under the PEPP, okay? So this is something that we're going to pay attention to. Now, if they were to stop bond buying under PPP, just like that, all in all, okay, then it's actually very good, all right? That means they're not going to purchase any more bonds buying. That means they require less, the Eurozone economy requires less stimulus, okay, which is very good, okay? But I can tell you that it's unlikely they're going to do that, all right? Because the Eurozone economy is still far from, doing this whole, putting an end to QE, okay? Chances are, my take is this, chances are Lagarde is going to, just say something like PPP, when it ends, we are probably going to just, bring it over to the APP, okay? And bonds buying will continue under the assets purchase program, or maybe part of it, okay? Part of it will be good, okay? Because, right now they are purchasing some close to 800 billion worth of bonds, okay? If they were going to transfer just part of it over, okay, maybe like just purchase 600 billion under APP, that will be a hawkish move, okay? Because less QE is being required from the central bank, hence less stimulus. So we can actually expect the whole monetary policy to return to policy normalization sooner than expected, okay? But nonetheless, we have to pay attention to the statement, which unlikely, okay, going to say much about it, which is why we will have to look forward to the press conference at 21:30 GMT plus 8, okay? Now, if you guys want to trade, yeah, the ECB press conference, chances are it's going to have a lot of, volatility, okay? And I'll be sharing the whole live stream link so you guys can just watch and listen to it. But just make sure your internet connection is stable, because you don't want to be like lagging behind, like Lagarde is already saying something that is 10 minutes into the future, and then you are still listening to something that is in the past, okay, and then trading based on it, right? It's going to be tricky. Trading is going to be tricky tomorrow evening, okay, around that timing. But yes, there's going to be trading opportunities, all right? So Lagarde will definitely be addressing journalists' questions on what's life after PPP. Will we see another new QE, okay, a new name to it, post-PPP program or something like that, okay? So these are the things that we have to pay attention to in terms of the ECB. All right, any questions on ECB? No questions? Okay, then just curious, like how many of you actually trade Swiss francs? Put a Y in the chat if you guys trade Swiss francs. If no, just ignore my questions. I don't see any Y. Y, no, like as in the letter Y, not WHY. Come on, Jean. I know Jean don't trade Swiss francs. Yeah. Okay, so looking at the chat group is quite quiet. I guess not many people trade the Swiss francs, okay? Nonetheless, if you guys are too shy to put an answer, right? The Swiss National Bank will also be meeting tomorrow, all right? At, where's the time? Yes, at 16:30 GMT plus 8. Just hours before the BOE and the ECB meeting, okay? So as we can see over here, expected to help interest rate unchanged at negative 0.75%. And yeah, you guys can pretty much be sure that this negative 0.75% is likely going to stay unchanged for the next, I don't know, several meetings, okay? And they don't even have a QE, okay? So yeah, no change is expected from the, Swiss National Bank, okay? However, there has been saying out there, I will not say, there's been some people commenting that the Swiss francs has actually been strengthening, okay? Has actually been strengthening against some major currencies like the euro, okay? You know what? I'm just going to share my chart with you guys. Let me see if I have yes, I do have my charts open. So let me just show you guys just a quick share on the charts. So over here, oh my goodness, dollar francs. Okay, this is let me just, oops, this is the weekly. I just go to weekly. Okay, so weekly chart. So we actually see that, this part over here is actually what we have for 2021, okay? So 2021, dollar francs has been up and down, up and down, up and down, right? Ranging across. So because of all the monetary policy decision by the Federal Reserve and things like that, okay? So not really a clear direction over there as to where dollar Swiss is going to be moving, okay? But if we were to look at euro Swiss, okay, euro francs, we see a recent strong downward move, some 470 pips downward move, okay, in recent months, okay? So that's actually a very, very strong strengthening of the Swiss francs. And if you look at the Aussie francs just below over here, we see that from the start of the year till now, it's already like some 300 pips downwards. Okay, so is the Swiss National Bank going to intervene again, right? So I just saw a comment over here that says, don't trust the SNB after the 15 Jan 2015. They lie and cheat. I totally agree with you, Victorio. Okay, I totally agree with you because they have actually made the list for the list of central banks intervention, currency manipulated, okay, list for the US. Okay, so from time to time, all right. So Donald Trump, the previous president, actually sort of like accused Swiss National Bank for intervening the currency. Okay, because the thing is this. Look, Swiss francs has been strengthening. Okay, after 15 Jan 2015, ever since then. Okay, strengthening and things like that. So the strengthening of currency, first impression is that it's good, right? The stronger the currency is, the better it is. But don't forget, okay, strengthening of currency can actually lead to inflation changes, right? And the strengthening of currency can actually prove things to be expensive in Switzerland, okay? And it's actually not very good, right? Not directly very good for the citizens of Switzerland, right? So as part of the central bank's duty, okay, they try to control, okay, I would say control with loosely speaking, okay, control the what do you call it? The circulation of Swiss francs or maybe any currencies, okay, in the market. So what they do is they actually buy more of the foreign currencies, okay. Hence, it can actually cause a weakening in the Swiss francs against the other currencies. Okay, that will make their currencies cheaper, okay, and probably better for the citizens. All right. So they have been doing this for years already, all right, which is why they always make the list for the currency, make the currency manipulator list from the US, okay? So like I said, the francs have been strengthening for the past few months, okay, against the euro and the Aussie, okay? And at the moment, there's no sign that the central bank has carried out more manipulation, okay, more buying of foreign currencies. So what we want to know from the Swiss National Bank this time around is has nothing to do with monetary policy, but it's more like their views on the strength of Switzerland francs. Okay, has it been strengthening? Okay, if they actually highlight that, we actually know that Switzerland francs has been strengthening for the past few months, then that may actually be a hint that they may be ready to take action. Okay, in this case, intervening in the markets, right? Trying to weaken the Switzerland francs a little and things like that. So that's pretty much it for the SNB meetings. Okay, just to pay attention to whether their views on how Switzerland francs is doing. All right. So no change on monetary policy. I'm not sure how they're going to deal with the whole COVID stuff, but we'll see how it goes. All right. But any other questions? Only when you put a Swiss francs trade, give me, yeah, only when you, I do trade Swiss francs from time to time, but the way I trade it is just based on risk on, risk off kind of thing, right? Like if we were to see Omicron variants worsening and things like that, then I will trade like pound francs or euro francs and things like that. Basically, the riskier currencies against the safe haven Swiss francs. Okay, so if there's no questions, I mean, if you guys have any last minute questions, just put it in the ECOFIN chat. All right. If there's no questions, I'll see you guys in the ECOFIN platform. And yeah, remember the FOMC meeting will be tomorrow at 0300 hours. Okay. Press conference will be held at 0330. I'll be posting up the links in the ECOFIN platform for the rate statements and the press conference live stream later on, just as we go closer towards the meeting timing. All right. So with that, I will hand it back to Scott.
All right. Thanks for that, Gimme. And just make sure everyone that you do check out the video when it is uploaded as well, just in case if you missed anything as well, because there are a lot of things going on, especially for Thursday. So we've seen that big events are coming up. So definitely review that before making any trade decisions as well. So just to go into the US dollar index now as well, we have seen some strength already. I've just had a look at the Aussie dollar as well. That's coming back down now, but we do have the USD index. We've got it over 96.50 now. We had obviously a pullback yesterday. This is the 4-hour time frame, but we are finding some strength. We had some PPI data coming out, beat expectations. Obviously, things are very expensive in the US. It's expensive to make things. There's shortages still. And, that was a minor news event, but it was still very much enough to hold up, the strength here that we see in the US dollar. And just to go to the calendar, just to touch base on what news is actually coming out later today as well. So this is in the GMT +8 time zone, just thanks to Forex Trading Asia with the economic calendar. So for Wednesday, what we are looking at, just for the US news, we do have, again, we've got quite a lot of news coming out. We have the retail sales and we have core retail sales actually expected to be a little bit less than last month. So you've got a 1% expected, 1.7 was the past month there, and retail sales down a little bit as well. So something to pay attention to. That could already start building some buying momentum if we do see the numbers come in a little bit better than expected, which is very plausible. And really, the main focus is obviously going to be on the FOMC economic projections. Now, something I found whilst Kim was just going through the Bank of England and ECB is, and I posted it here in the ECOFIN platform. No, I didn't do this though, but the FOMC policy decisions scenarios. And it's quite interesting. We've got the USD impact and we've got the S&P risk as well. So obviously we'd focus on the USD impact, but obviously a rate decision coming out 25 basis points, that's very unlikely. As you see, market probability of 0%, but that's very bullish. Now, this is interesting here with the policy statement. So the intended pace, so a faster taper is seen as very bullish. The taper ends by Q1. Now that's a 25% chance. So the faster taper is seen at a 90% chance, and that's seen as bullish for the USD impact. And obviously the market is suggesting that. So definitely pay attention though, if for some reason it only comes out with hints of earlier hikes, because that's, seen still as bullish, but if we do have concerns of market excess, that's actually seen as neutral. But I think that's likely that that's going to happen. Now, the growth, inflation, job forecasts, rate hike pace. So economic forecasts are lowered, and we've seen that at 75% chance, and that is bearish. And then obviously we've got inflation forecasts raised, and then we've got jobless forecasts lowered. So that's seen as neutral there. So something to pay attention to with the job forecast and growth. And then interest rate forecast. If we do have no or one Fed hike here, and that's seen as a low market probability, that's very bearish. 2 hikes, that's seen as neutral. And then if we have more than 2 Fed hikes for 2022, and that's seen at a 40% chance for the author's probability, or a 60% chance for the market probability, that's seen as bullish. And then finally, the press conference from Powell at 3:30 GMT +8 tomorrow morning, the inflation less transitory is bullish for the US dollar. So again, though, they could fall back with the COVID-related uncertainty, but likely that we do see, and it's already been mentioned by Powell in regards to the bullish sentiment there, if inflation is less transitory as well. So something to really pay attention to. Now, with the chart as well, frankly, just to go back now, I'll just go stop sharing and I'll share again the chart. I'll be quick with this as well. So looking at how we're actually playing out already, I would say that it's, really a small pullbacks are being bought into. So, but watch out for the release though. So if you haven't taken a position, leading into the news, please be very careful. Don't sort of jump in just at the release. Be a little cautious and let the market digest things a little bit. But we are obviously going to be in the ECOFIN platform to help out for any members looking for guidance. But those are my thoughts there on the US dollar bullish thesis as well. So we do have the pound, a lot going on with the pound. Gim covered a lot, but Jin will just go through any potential trade ideas and anything to pay attention to for today's trading session. So over to you now, Jin.
Thanks for that, Scotty. And Gimme has covered everything. I don't know what else to add. What else can I add, Gimme? Come on.
Add some sugar.
Oh, yeah, that's bad.
Add some coffee.
I had too much coffee. So, pound dollar in focus, what could move? I mean, as everything that Kim Hong has been telling you about already. So checking the calendar again, today being Wednesday, we do have the CPI numbers to be released. We are looking at an expected about 3.9. The Forex factory is showing a 4.8. We have different sources showing 4.5. So it ranges from 3.9 to 4.8. Anticipation is that we're definitely going to see a better than 4.2 number for the year-on-year CPI. But bear in mind, I would keep, it sounds like we're broken record again. Keep your trades short term, because at 3 o'clock GMT plus 8, when this news is being released, what we do have is also the FOMC later tonight or early tomorrow morning. So trades will have a lot of volatility, but it will also probably be not very clear in terms of direction. And following on from that, the rate voting from the BOE, as Kim Hong was already sharing, there might be a bit of a change. We might be looking at a bit of a surprise there. But what it all means is, looking at the charts here, the reason for my background where you're breaking through that wall, the pound dollar on the H4 time frame right now sitting at this 1.3222 support level, this green line here. If I zoomed in a little bit just to make it easier to see, at this point, what I'm anticipating is good news, strong CPI number coming from the UK. We could see that push upwards towards that 1.3365 resistance. But with the FOMC coming up, possibly that stronger US dollar, we're possibly going to see that turn back down again. And then after that, with the Bank of England possibly being the hawkish member turning, possibly being a little bit more cautious, we might see that push further back down with the a bit of weakness on the pound, and also that some strength still continuing from the US. So it might look like that, but the good thing about it being at that support level is, what in terms of trades, what I would be looking for is buying opportunities above 132.52. That means you have about a 30 pip waiting period right now. It has to close above 132.52. Your stop loss could be 30 to 40 pips. Your take profit could be that 90 pip take profit. So you're still looking at a 1:3 or about a 1:2 risk reward ratio towards the 133.65 level. Ideally, that's the plan. But if we do see CPI being slightly priced in, markets are expecting that good number, then we could also see the pound dollar track lower, breaking below this 132.22 level. Again, about a 30 pip waiting period, 30 pip stop loss for that 80 pip take profit level, or 1:2 risk reward ratio towards the downside. This first move will be dependent on the CPI number to be released later today, or at 3 o'clock. And then the next move, what we anticipate is that stronger US dollar, either the reaction towards that resistance level or that breaking down of that support level, where we might expect the US dollar to come into play during the FOMC news. Then after that, with the Bank of England, I think by that time, we might not be seeing too much of a surprise. I would say this first two moves will be the more interesting or the more crucial events that you want to pay attention to. So with all that expectation for the pound dollar, what we could be looking for as well on the euro pound is for that reaction of this 84.97 level. We've seen that. I was expecting it to push higher to turn down. It didn't happen from our analysis yesterday, so I'll take that away. But what we expect here is, if we see the pound dollar push higher, pound dollar pushing higher, that would mean that the euro pound should come down, break below that point, break below that 84.97. That same analysis that we did last week comes back into play. I will draw this line straight across again. Look for that selling opportunity below 8487. And then you could be, I wouldn't consider 8462 at this point. I would say if you do sell it below this point, about a 20 pip stop loss for a good 60 pip take profit, a 1-to-3 ratio towards the downside, towards that 8419. I think that this is quite a high likelihood because as we check back on the euro dollar, it is testing that 1.1254 level, anticipating that drop. If it does break below, could give further impetus for the euro pound to track lower as it breaks that support. So quite a few trade ideas again on the pound dollar and the euro pound, driven by quite a lot of news items to be released for the next couple of days. Make sure you keep your trades short term, well managed, and I'll pass it back to you, Scott.
Thanks for that, Jen. I just shared those trade ideas as well in the euro pound section. And again, make sure you do hang around the EcoFin platform as well, especially later on today. Past 8 o'clock GMT plus 8 is usually when things really start, moving along. So we will be in there, guys. And thanks again for joining us. And we will see you tomorrow for the yen and gold analysis. Hope everyone has a great day as well. And we'll see you then. Bye, everyone.